All right. Today, time. All right. Monday, April 7th, but what happened yesterday being 4th of April, Friday, last Friday, right? So today I wanted to share a new format that I will just try today, and if you like it, I will do it like this. Otherwise, I can go back how I was doing it before. So yeah, I can share one of my sad story of what happened Friday. Sadly, these images are all broken here in the Canva thing, but I tried to take a long position. And yeah, I did all the calculations, but sadly, the long position was liquidated uh, three, 3, 4, 5 minutes after I set the entry. So yeah, I'm doing study cases daily, and beside, I do study cases from my losses. So every time that I have a loss, I do a study case like this, and then I don't put another trade until I memorize every single step. All right. So first of all, I went to the daily chart and I start to map my liquidity from the left, represented by a red line, and you can see an order block in the top. This order block was I was considering because it was the last one with the fair value gap. So pretty much in the Thursday rally up bullish. Of course, I guess it was a move before the news of the new tariff and blah 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 blah. So yeah, high time frame. My eyes will go into the liquidity and mitigation area, being represented by the order block and the red lines. So this is a 4 hour chart, and what I wanted to show here, I wanted to show this part of the low and the high because the price will go and point being playing with this liquidity, internal, external, external, internal. Friday is represented by this box from here. Here is where my stop loss was taking. Yeah, this is part of the game. And what can I see? And this how do you say, presentation page? I have an interaction with the order block, right? With this order block. We don't know if it's a SMT yet, or I mean, at some point it will become liquidity, but this is not a topic for today. So the thing is that we have this bounce right here in the order block, and this is what I need to study. The bounces on the order block are well represented by a bubble, orange bubble. All the orange thing means you're having it's not a rejection, the word that I like, a reaction of the SMT. So after I do have a reaction in the SMT, I need to find my internal range liquidity or my XOB, my extreme order block, right? For mitigation. So I have mitigation and I have liquidity. So this is my steps of the thing. So after I map this, because we imagine that we are right here in this line and we are having this, so you instantly you map to these areas from here. Later in H1, yeah, that was, let me go back. Yeah, that was H1. So what do we have in H1? We have the SMT, we have the rejection of the SMT. Now I map this little fake break of structure, bullish, and we have the inducement right down below. And then what do we have here? This is my 3 a.m. mark that I will consider when the day starts at 3 in the morning. So I have my fake break of structure bullish again and my inducement in the low. Market start to build liquidity to the high side and arriving to this mitigation, right? Because if we consider, for example, that this will be or this line or whatever where the price is now bouncing, potentially a breaker block, blah, blah, blah from the left. It will go to internal range liquidity and mitigation. That's it. Interaction with SMT, put it on your brain. Internal range liquidity and mitigation. So price deliver into this SMT or order block reaction. So after right away, we map the green things. Also, we can say that the price deliver when it take all this liquidity from here because we have like a really Ascendance Day with a really sharp direction. What do we have here? We have the price delivered at this zone, right? So after mitigating this area and the high zone, the supply zone, I can consider this that was the move. So I will say that this after the price deliver become the order flow. Really hard to write with. Oh, there you go. OF, order flow. So we go to 15 minutes, that's how it looks. And yeah, I want to show you also this, and that's what I like, this Canva thing, because I can be faster than mapping the things there. So yeah, now in this, if I drop from 1 hour to 15 minutes, now I can show you where the fake breakup structure and the inducement. At the same time, this is buying inducement from here. It's green. Why? Because I consider internal range liquidity after the bounce of the interaction of the price with the smart money trap in the top supply. All right. Every inducement, it's going to come with a smart money trap. So uh, after saying that, I can consider this here and this area a bounce of the smart money trap, right? So if I have this bounce in my smart money trap, which is here for the inducement, I need to map my internal range liquidity and my mitigation zone, being my extreme order block of supply in this case. Then if I look closer to the 5 minutes, I did nothing there. Yeah, I was calculating how much was the gap because this was my main problem. I enter in the neutralization of liquidity and you never have to do that. But as I say, I study smart money concepts and this is something that I need to eradicate from my process of taking a trade. So whatever, these are my internal range liquidity. Why I'm mapping this? Because remember, we are bouncing from this high time frame supply area. So also another step that I did wrongly, I didn't was able to find any MSCU there for bullish purposes. But if I go and I do a little bit zooming, yeah, I kind of have this break of structure to the upside, inducement to the buy side. Means this one in the low, fake break of structure inducement, fake break of structure inducement over my liquidity. But this is the point. Like this is what I need to start to think better because this liquidity was taken out and this is not like all right, this is gonna hold. You can think like yeah, you can use the 50% because blah 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 blah. But yeah, I mean the price was kind of a building more liquidity. And how do you know? Because it's also respecting a tendency and this guy from here is protected, so this was a short. But I will never take that short. Why? Because my eyes was in this order block and thinking on the high liquidity in there. So we have this more or less good-looking MSCU there, but yeah, this is the point. Even for the timing at 10:30 or 12:30, I don't have any confirmation for entry. I enter here at 10:30 thinking like, yeah, this is the timing where the magic happen. No. So this is the thing that I need to put more consistency in my logic. I could discard this double MSU by M15 because they look awful. But then the problem is like this one also look awful. So how can I consider that one? So yeah, here's the tricky part of trading. Like you also could don't do anything, right? That's the best part, I guess so. So part of the context is that you have this guy and now you have this smart money trap from here. So you will have a bounce. Oh, I have 1 minute left. That's my bubble from the bounce. That's my internal range liquidity. And for long, you can go to the ERLF until the extreme order block. And for short, you go from the extreme order block down, right? So that could be if you enter in the buy inducement of M5, I think it was. You have some liquidity from the left, and then you cover and the extreme order block, right? But it was 28 pips. So as a day trader, I used 2 pips. So these days completely are twisting my brain. But this is the long that you could take. Also, you can use the 50% of the extreme order block. And then for the short was the same, but from the extreme order block supply, of course, to the smart money trap where we are having the bounce. So that's pretty much that how they look there. And then you also have this fake boss inducement, selling inducement on your extreme order block using the 50%, and you can go to the smart money trap as well.